Very good morning, friends. I hope I'm audible.
Yes, sir.
Wonderful. Thank you. So I hope everybody is doing good. And I think last session we didn't do anything technical. So I'm not even asking you whether you made a revision or not. I'm sure it would have taken you just hardly around 5-10 minutes to, I think, revise what we did in the previous session. Okay, so I think let's take the journey forward. And let me tell you what is the agenda for the day. I am now today going to expose you to the different accounting terminologies. If you remember, last time when we were talking of the elements of financial statements, I said balance sheet contains assets and liability, and income statement contains income and expense. So my focus today is to expose you on four terminology: asset, liability, as well as income and expense. I think once you're able to understand these terms well, I think a lot of inputs on the basic gets clear. I know many of you would already be aware of these terms and you would be very comfortable in terms of understanding what is an asset, liability, etc. But I'm not going to give you any kind of academic definition. I'm going to give you some parameters with which you can actually logically understand that what is an asset. But I think before I expose you to these terminology, I think I want to first of all give you some insight on this element. There is some background which one needs to understand before I take you further on this. So let me, I think, first give you something very basic to begin with as a background. Okay, I hope my board is visible. I hope you can see that. Now, first of all, what we need to keep in mind is, let's say, for example, Mr. X starts a business. So let's say, for example, Mr. X starts a business. Now, the first thing what you need to keep in mind is, when I say that Mr. X starts a business, you need to consider Mr. X and the business as a separate legal entity. So you need to consider that Mr. X and the business are supposed to be a separate legal entity. We never consider we never consider that the business and the owner are the same person. They are considered to be a separate legal entity altogether. That is one. Second, now you need to keep one thing in mind, that when you do accounting, it is always done from the point of view of the business. So that's another important element which you need to keep in mind, that when we prepare the books of accounts, when we do accounting, it is always done from the point of view of the business. So for example, if we say we made a sale, I'm not going to say that Mr. X made a sale. I'm going to say the business made a sale. If there is a machine purchased, we will say it is purchased by the business. When the money is collected, we will say it is a business which collected the money. So very simple little thoughts. But I think you need to keep that at the background, that when you do accounting, please keep two things at the background of your mind. One is the separate legal entity concept. The owner and the business are separate legal entity. Number two, the accounting is always done from the point of view of the business. So this is a background which we'll consider as we understand the accounting terminology. Okay, I think before we start and I take up the inputs in terms of what is an asset, I think I want to ask questions to you. Let me get some insights from your side. Can you tell me, what do you understand by an asset? Give me your inputs on the chat box. Tell me, what do you think by an asset? If you were to define what an asset is, let's see what is your inputs on that. Many of you from the accounting background, so I'm sure I'm going to get some wonderful inputs. I get the first input: anything of value that generates value to the business, owned by the business, controlled and with the cash flow is expected, future benefits, wonderful, which utilize to make profits, anything which we own, future benefits. So we're getting some very common terminology: future benefits, control, ownership, and other factors. Great. So I think that's good thought. Benefit that is yet to be obtained. Okay. Now, what I am going to do, friends, with you, I'm going to give you a very simple three-step model. This is a step model which I have created for the benefit of understanding. So, in any case, this is what my insight about the asset is, and trust me, it works well. It gives you a good understanding. How do you identify that a given expenditure is an asset? So, I'm going to give you a three-step model, and I call it as KB's three-step model. You know who's KB? I think that's more important question in the morning. So I, nicknamed this as KB's three-step model. And that's right, my name, I've kept it Kapileshwar Balla. So I've kept it as KB's three-step model. So let's begin the journey. So just hear me carefully. We'll take a good number of examples to understand this, but let me first give you an exposure on the three-step model. Now, please hear me very carefully. Let's consider a timeline. Let's consider a timeline. Internationally, we always consider the financial year January to December. In India, we consider the financial year April to March, but internationally, the financial year is taken January to December. Now, what I need to do in terms of my step number one, I need to put a question. But let me first remind you something. When I said a company makes financial statements, the balance sheet of a company is always prepared, if you remember, as on a particular date. A balance sheet of the company is always prepared as on a particular date. And if you remember, the income statement is always prepared. The income statement is always prepared for the year. It is prepared for the entire year, that is a period of 12 months. So when I am looking at an asset, my focus is 31st December. Mind the words carefully. When I'm looking at an asset, my focus is on 31st December. Now, what I'm going to do in terms of step one, or you can say question number one, I will first of all put across a question in step number one, and this question is going to be put on 31st December. The company may incur the expenditure any time during the year. Please mind the words what I'm saying. The company may have incurred the expenditure any time during the year, but I am going to sit down on 31st December and put a very simple question. Now, what is the question? I'm going to put across a question that is the benefit of this expenditure. Don't worry, I'll give you the detailed notes later. I'm just giving you some basic structure. I'll document the notes later. So right now, even if you don't write, it's perfectly okay. So we will say, is the benefit of the expenditure, is the benefit of the expenditure already obtained? Is the benefit of the expenditure already obtained, or it is yet to be obtained? I'm going to put a very simple question. A company incurred the expenditure during the year. The timing factor can be anything. But I'm going to put this question on 31st December, that is the benefit of the expenditure already obtained, or is the benefit yet to be obtained? I know there can be a third possibility as well, that you would say that the benefit is partly obtained and the benefit is partly yet to be obtained. I don't deny the possibility. So, of course, there is a third possibility as well, which could be a mix of the two. But trust me, there cannot be any fourth possibility. So when I sit down on 31st December and I put a question, that is the benefit of the expenditure already obtained, or is it yet to be obtained, or is it a mix? Let's leave the mix for the time being. We'll come back to the mix option later. But when you say it is yet to be obtained, trust me, it will definitely create an asset. And if you say it has already been obtained, it's going to become an expense in the income statement. So I think let me just connect the dots once again. We'll take examples also to understand the step number one. Now get the focus point clear. The expenditure is incurred anytime during the year. That's not important for me as of now. But I am going to put a question to myself on 31st December, that is at the year end, that is the benefit of the expenditure already obtained? If you say yes, it's an expense in the income statement. If you say no, it is yet to be obtained, it's an asset. And let me also tell you that if it is a mix of yes and no, then it's going to be partly an expense and partly an asset. Did you get the conceptual understanding of my step number one? Did you get the inputs, how you going to think in terms of step number one? Great. Now let's take some examples with you. And you have to decide, is the benefit of the expenditure already obtained or is it yet to be obtained? Mind the inputs clearly. On 31st December, the company purchased a building. On 31st December, the company purchased a building. Is the benefit already obtained or is the benefit yet to be obtained? And I get the quick answer, wonderful. The benefit is yet to be obtained. It is undoubtedly going to become an asset in the balance sheet of the company. Now, I know there might be a lot of questions coming to your mind as well, and people will ask me, sir, is the legal ownership important? Let me tell you, no. When you did basic accounting, well, you would have always understood that the legal ownership is a necessary prerequisite. But let me make it very clear that as you go up to the technical accounting, though we are studying basics, but these basics are meant for learning the higher level of accounting as well. So if you tell me that the legal ownership is a necessary prerequisite, I would outrightly say no. So in my three-step model, nowhere are you going to see the concept of legal ownership. Okay, let's take more examples. Let's say an employee joined my company on 1st of December. An employee joined my company on 1st of December. He worked for the month of December, and on 31st December, I paid his salary for the month of December. Is the benefit already obtained or is the benefit yet to be obtained? And that's wonderful, correct? Absolutely correct. He gave me the services, and as an employer, I received the benefit of the services. The benefit is already obtained, so it becomes an expense in the income statement. Wonderful. Let's take one or two more examples to get it absolutely clear. Now let's consider that I made an insurance premium. I paid an insurance premium on 31st December, and this premium is paid for the next year. The company paid an insurance premium, and this premium is paid for the next year. Is the benefit already obtained or is the benefit yet to be obtained? And that's absolutely correct. The benefit is yet to be obtained, and therefore it becomes an asset. I think you're all getting very comfortable with the inputs. Sounds good to me. Okay, so let's take one more last example and then we can switch over to our second step of thoughts. Now, what I have basically done, I am trying to make you think on a very chronological order. I believe AI is the buzz today. And when you look at artificial intelligence, it's got the art of thinking on a step-by-step basis, and I'm going to make you think like AI so that we don't go wrong. Okay, so let's, I think, take the journey forward. Let's take one more last example. Now, this time, my company purchased a laptop on 1st of January. My company purchased a laptop on the 1st of January. The laptop has got a life for 5 years. I purchased the laptop for 1 lakh. Get the data clear. My company purchased a laptop for 1 lakh rupees and this is purchased at the beginning of the year. Is the benefit already obtained, yet to be obtained, or is it a mix of both? I purchased the laptop on the 1st of January, and that's right, it is a mix of both the two. If I were to ask you that you purchased the laptop for 1 lakh rupee and you have used it, consumed it for 1/5, right? 1 year. So would you like to tell me in money terms that how much benefit is already obtained this year? That's wonderful indeed. You can say 20,000 benefit is already obtained this year. That's absolutely correct. And we can say, if I say the remaining 80,000 rupees, can I say that becomes an asset in the balance sheet of the company? Because the benefit of that is yet to be obtained. Wonderful. I think your answers is giving me a sense that you've all understood the question number one wonderfully well. Say yes. So I think that journey makes it simple to think. Okay, that's wonderful indeed. Now let's expose you to the step number two. Now we're going to go to the step number two. Having understood step one, don't worry, I'll make some formal notes to you very shortly after I'm done with the inputs. Now, once you're done with the step number one, now you need to go to the step number two to the extent you say that it is supposed to be an asset. Okay, I think I got a question from Manali. Can you explain the calculation? Okay. Can I say 1 lakh rupee is what is the value of the laptop? And if it has got a life of 5 years, I'm going to divide this by 5. So you get 20,000 per annum. And that's what we technically also call depreciation. That is also what we technically call as depreciation. So the 20,000 is what we call depreciation. Okay, I get the answer. Sir, quick question on the benefit from the asset. Did we consider salvage value as well? No, not as of now. I didn't want to complicate that at this stage. So I just gave you a very basic input that considering, okay, my voice is low. Is everybody getting my voice low? I get the input. No, the voice is pretty okay. So maybe I think you need to, maybe I think, use your button on the laptop for the volume. Maybe there could be some issue. So just please check that once again. Okay, so let's, I think, take the journey forward now. I hope you got your answer, Manali. I think on that, you're clear with the figure of how do we get the 20,000 rupees. And that's what is called depreciation. Great, wonderful. Now let's go to the step number two. Now we're going to go to the step number two, and I am going to put a question again on 31st December. Get the focus clear. Your question in step number one is on December 31st, and your question in step number two is also on 31st December. Now, let's see what you need to ask yourself. Now, this could be, applying a little judgment, very basic level of judgment. So let's say this is the timeline, January to December, and I'm now looking at a question in step number two on December. Now, when you say the benefit is yet to be obtained, you need to see the benefit will come for what period. Now, the focus in step number two is on the period of benefit, that you are yet to get the benefit. So I want to understand, is the benefit going to exhaust within a period of 1 year? 1 year or less than 1 year, or the benefit is going to extend beyond a period of 1 year. So you need to see and visualize that when the benefit is yet to be obtained, your focus is now going to be that is the period of benefit 1 year or less than 1 year, or is the benefit going to extend beyond a period of 1 year? If you say the benefit is going to exhaust in 1 year or less than 1 year, I'm going to call it as a current asset. And if the benefit is going to extend beyond a period of 1 year, I'm going to call this as a non-current asset. So now in step number two, the position is classifying the asset between a current and a non-current asset, and that depends upon the period over which you will get the benefit. If the benefit is going to get exhausted within 1 year or less, it becomes a current asset. And if the benefit is going to extend beyond a period of 1 year, it becomes a non current asset. I think let's take examples now to understand this further. You must be realizing that I am combining a little of basics and a little of advanced accounting put together and making this a three-step model, because the idea is not only to give you basics but also to improve you much more than that. Let's, I think, take some examples. Now you apply this. I get a question, Jay Prakash. This is for yet to be obtained assets, right? Correct. When you say it's an expense, we will not go to step number two. When you say it is a mix and it is partly expense and asset, for the portion which is expense, you will not go to step two. We will go to step number two only when you say it is an asset. So, to the extent the expenditure creates an asset, we go to step two. To the extent the expense is income statement, no need to go to step two. I hope you got your answer on that. Okay, now I think let's give you more examples and let's understand. Let's get the second step also clear. Number one, the company purchased a building on 31st December. So we say the benefit is yet to be obtained. We go to the step number two because it's an asset. Now, what is your logic telling you? The benefit will be coming for 1 year or much more than 1 year. We consider the life of the building is going to be much more. And that's right. If the benefit is going to extend beyond a period of 1 year, it undoubtedly creates a non current asset. Superb. Let's take more example. Let's go back to the same example. On 31st December, I made a insurance premium for the next year. I pay an insurance premium for the next year. Now tell me, is the benefit going to exhaust within 1 year? Or is the benefit going to extend beyond 1 year? And I think I've already got the answer that the benefit will go to exhaust in 1 year. It becomes a current asset. Life made easy, right? So that's wonderful answers indeed. Let's take more example. You know, as we go to move further, you will realize that certain assets are always non-current. You will realize that certain assets are always current. And I'm going to come to that part as well. Though since we're learning at a very basic level, we're just trying to understand what is current and non-current. But trust me, when you look at a balance sheet of a company, things are always presented as current and non-current. And that's something, some items obviously are always current. Some items are obviously non-current. Nobody will come to that. Let's take more example. Now let's consider that I had an employee who joined my company on 1st of November. And on 31st December, I gave him a 1 month salary. He said, "Sir, can you give me another 1 month salary for the month of January next?" I said, "Okay. I give you a salary for 2 months. I give you a salary for 2 months. One is for the month of December and one is for the month of January. Is the benefit already obtained, yet to be obtained, or is it a case of partially obtained, partially yet to be obtained?" Great. 1 month benefit already obtained and 1 month benefit yet to be obtained. So 1 month becomes an expense in the income statement and 1 month is going to be asset in the balance sheet, current or non-current in nature. So he is going to give me the benefits over the next 1 month. Once he gives me the services in the month of January, I get the benefit, and that's rightly said, it is current asset in nature. I think it's a bit early, but I think I'm still want to ask that question. Are you absolutely comfortable on the two steps I've explained you? Any questions coming to your mind, please ask me, because my third step might be a little technical at this stage. Are we comfortable to go to the third step? Absolutely clear with the inputs on the two steps so far? Super, that's great. I'm sure I would have started making changes in your life the way you think. We're not looking at the traditional kind of definitions, broken it down into a different kind of concepts to maneuver and change your thinking to the good, not to the bad. Okay, then I think let's go to the step number three. And I'm going to conduct a small little test also very shortly after my three-step model is done. Now, irrespective, you decide in step number two, is it current or non-current? I repeat, irrespective whether you decide it is current or non-current in terms of step number two, you need to go to the step number three. So whether you say current or whether you say non-current, you go to the step number three. Now, in step number three, you need to classify the asset into what we call financial asset and what is called non-financial asset. Financial asset and what is called non-financial asset. Now, this might be a new term for many of you. So let me explain that what is financial and what is non-financial in nature. Now, hear me very carefully. There are two kinds of assets. One is those assets which will give you the contractual right to receive. When you say financial assets, they are those assets which will give you a contractual right to receive. They will give you a contractual right to receive. Now, when I say contractual right to receive, that is one, and that would be a contractual right to receive cash. Mind you, there are two focus points. There are two focus points before you classify the asset as a financial asset. You should get the contractual right, which means if somebody owes me the money and he doesn't pay the money, I get the right to sue him in the court of law. That creates a contractual right. But trust me, in order to call it as a financial asset, you need to get the right to receive cash. So before you zero down and you say that it is a financial asset, you need to prove two elements. You need to prove two elements that number one, you're getting a contractual right. That is one, and the right should be to receive cash. If you say yes to both of them, it creates a financial asset. Nobody will take examples. And when you say it is a non-financial asset, certain assets do not create any right, but they create an opportunity to receive benefits. They do not create any kind of right to receive, but they create an opportunity to receive benefits. Let's take a few examples directly on step number three. I'll give you certain assets and you decide whether they're going to give you a contractual right to receive or an opportunity to receive. Let's, I think, put those questions to you. For example, I purchase a building, certainly an asset. Do you think it's going to give you a contractual right to receive? Or do you think it is going to give you an opportunity to receive? You can definitely give the building on a rent, and that will give you an opportunity to receive. Wonderful. So it becomes non-financial asset in nature. Let's take more examples. Now, let's say you remember the insurance premium which I paid in advance. When you paid the insurance premium in advance, can I say, is that going to give you a contractual right? I just said number one, is it going to give you a contractual right? Yes, it's going to give you a contractual right. Why? An opportunity. You will get a contractual right itself. You've entered into an agreement with the insurance company, so it's going to give you a contractual right for sure. But let me ask you, if you are getting an insurance done, is the insurance company going to, let's say, compensate you for the loss in cash, or maybe they provide you services, for example? Okay, I think let's take the case of rather first advance salary to make it more clear. I think let's first come to the advance salary. When I paid the advance salary to the employee, does it create a contractual right? Just a contractual right. When you give an advance to the employee, it certainly creates a contractual right. But are you going to receive cash? Or are you going to receive services in return of the advance given? That's right. Since you get the contractual right, element one, but you're going to get the right to receive services and not cash, financial or non financial in nature. And that's rightly said, it becomes non financial because you need to prove two elements: the right to receive, that is one, contractual, and the second is you receive the right to receive the cash and not services. Okay, so I think we are getting a fair idea now. I guess let me now put some rapid fire questions to you where you could apply all three steps. Tell me the status, that whether it's an asset. Okay, insurance premium could be cash and service. Yes. And I think in that particular case, I would say if you get the right to receive cash, it becomes financial. If you get the right to receive service, then it is going to be non financial in nature. So that's why I left that example a little in between because that could have created a little confusion as well. Okay, comfortable, I guess, with this inputs indeed. Okay, so my mind is now working on a very simple agenda. I'm just going to give you a few examples. You'll quickly decide expense asset. And if you say an asset, it'll be great if you can also tell me current, non-current, financial, non-financial. Okay, let's say I made a credit sale to my customer. Let us say I made a credit sale to my customer. Now, for those who are learning accounting for the first time, when you make a credit sale to the customer, he's called a debtor. He's called a debtor. And let me also tell you at this stage, when you make a credit purchases, your supplier is called creditor. So when you make a credit sale, your customer is called debtor. And when you make a credit purchase, your supplier is called a creditor. Okay, let's come back. So my company made a credit sale to the customer, giving him a 3 months credit. Is the benefit already obtained or is it yet to be obtained? I made a credit sale and the money is yet to be collected. Great. I gave a 3 months credit. Is it current or non-current in nature? And that's right, it becomes current asset in nature. Do I get the contractual right? Number one, and to receive cash. Number two, yes, I get a contractual right to receive the cash. It becomes financial asset in nature. Wonderful indeed. Now, let me also tell you one thing outrightly at this stage. When I say cash, trust me, cash is always a current asset and cash is always a financial asset. You know, when you look at the higher studies and when you look at certain accounting standards, it is very clearly given, like for example, in US GAAPs in ASC 718, which talks about financial instruments, very clearly tells you that cash undoubtedly is a financial asset. So there is no dispute. They very clearly said that cash is a medium of exchange. Cash is the medium through which transactions happen. So cash is always a financial asset in nature. Let me just consolidate the three steps in my mind and then we'll document this. Now, I get a question. So, if the period is extended for 13 months, it becomes non current in nature. The moment your credit period is more than a year, it becomes non current in nature. Great. So, we're just going to now consolidate the three steps in mind, document them, and then I think we're ready for a test. You want me to first give you a test or you want me to first document the notes? I think you want me to document the notes first before I take a test, right? That seems good. Okay, wonderful indeed. Let's, I think, first consolidate the inputs. So we are looking at step number one. So step number one, you're going to put across that question at the end of the year. Is the benefit already obtained, yet to be obtained, or a mix of the two? If you say already obtained, expense. Yet to be obtained, asset, and go to step two. If it is a mix, to the extent it is already obtained, expense. And to the extent it is yet to be obtained, asset, and you go to step two. Step number two, your focus is again on 31st December, and you see the benefit will exhaust in 12 months or extend beyond 12 months. If it is going to exhaust within 12 months, 1 year or less, current, otherwise non-current. Irrespective, you come to the step number three. If you get the contractual right, element one, to receive the cash, element two, financial, otherwise non-financial in nature. Okay, let's, I think, document this now. So I've got patented rights to my model as well. Because I've created this model, I've got a patent rights as well on this model. So what you're going to give the heading is KB's three-step model. That's how you're going to remember me. So KB's three-step model, and this is on the concept of definition of asset. So I've created the definition of asset based on a three-step model. Let's document this out. Step number one is the benefit. Is the benefit. Underlying the word benefit is the benefit of the expenditure. Is the benefit of the expenditure. And you need to put this question on 31st December, that is on year end. So is the benefit of the expenditure, we're going to get three permutation combinations already obtained. Is the benefit of the expenditure already obtained? That is one combination. Or it is yet to be obtained. Or it is yet to be obtained. Or we can say it is a mix between the two. If you say it is already obtained, it becomes an expense in the income statement, and there is no need to go to the step number two. But if we say it is yet to be obtained, it certainly creates an asset, and you need to go to the step number two as well. And if it is a mix, it'll partly create an expense and it'll partly create an asset. And to the extent you say it's an asset, we're going to go to the step number two. So your step number two is going to be applicable only to the extent you say it is an asset. Let me know, friends, if you have documented this. I'll take it forward. Okay, done, I guess. Great. So I think let's proceed. I think I just got one message so far. I think still people copying. Okay, I get the messages done. Okay, wonderful indeed. Then I think we're ready to proceed to the step number two. So this is step one. Now we go to the step number two, where the focus is again on the year end. So we're going to put this question again on the balance sheet date, that is 31st December. So is the benefit, so here again, the focus is that is the benefit. There are two possibilities now. The possibility is that is the benefit going to get exhausted? Is the benefit going to get exhausted? So is the benefit going to get exhausted? You can say within a period of 1 year or less. So it is inclusive of 1 year or 12 months. Or is the benefit going to get extended? Going to extend beyond 1 year? So it is going to extend, you can say more than 1 year. So when you say it is going to get exhausted, it becomes a current asset. And when you say it is going to be extended, it becomes non-current asset. That is called NCA. And irrespective of both the cases, whether it is going to get exhausted or not, we will still go to the step number three in both the cases. So you just need to look at the time span, the period over which the benefit will come. 1 year or less is current, plus more than 1 year becomes non-current. Okay, so I guess if you're done, then we can proceed further. And then irrespective, whether you say current or non-current, you need to go to the step number 3, irrespective. Okay, I guess done with this. Now let's go to the step number 3 now. So based on the step number 3 now, we need to do the classification of this asset. So here the aspect is on classification. First classification was on the period. The next classification is on the right. The current and non-current will be segregated in terms of financial as well as non-financial in nature. So when you say financial, I would put it like this, that there are going to be two elements when you call it as financial asset in nature. So let's put it very clearly that there are two elements so that it's visibly clear. The element number one is that you get the contractual right to receive. The element number one is that you get the contractual right to receive, and the element number two is that you get the right to receive cash. So it is both the conditions, the contractual right and the right to receive cash. I think it's good to say not goods and service. Not goods and service. And when you say it's non-financial, it is going to create an opportunity to receive. Is going to create an opportunity to receive. So when you say it's an opportunity to receive, it becomes non-financial in nature. Wow. So my three-step model stands documented. I'm sure you would never spend so much time. I think we spent almost 45 minutes or so in terms of understanding the definition of the word asset. I'm sure now in life, you'll never ever go wrong in terms of deciding what an asset is. Let me, I think now, get a little comfort zone. Got another small little habit. I don't know good or bad it is, but it's a habit of asking people to give a comfort zone scores on a scale of 10. Sometimes, after finishing a certain concept, it is good to ask because, on a online medium, sometimes you're not able to look at people, but your chat actually gives you that kind of assessment. So I'm already started getting a scores on 10. That's wonderful indeed. I think majority is on a score of 10, except one or two people on a 9. And that's also pretty good. Sometimes, don't want to overassess yourself. Okay, I think I got a score of 7 from Jayaprakash. Okay, I think you might be new to accounting. Is my assessment correct? Please give one example of a non-financial asset. Okay, we'll do that. So what about bonds as an example? It's a contractual right to get cash, but also an opportunity to? No, it's a contractual right to receive cash. And it'll always be a financial asset. Any investments for that matter. I think let's put that question very clear. I think Rakesh, you asked me that question. Any investment for that matter is always a financial asset. Whether you invest in the equity shares of the company, or whether you invest in, let's say, any bonds or any debentures of the company, all investments are always financial asset because they will give you the contractual right to receive cash. They will always be financial assets in nature. Okay, I think I was looking at a question. I think somebody was also putting a small little question on, so it's 1 year or is it operating cycle? Well, technically speaking, it depends upon the concept of operating cycle, but generally, 1 year is considered as a practical base. Of course, if you look at the larger concept, it depends upon the concept of operating cycle. But the common parlance and generally in a practical world, generally 1 year is considered to be the cutoff factor. But yes, operating cycle also has its role. But I didn't want to complicate that part and put that operating cycle into it at this stage, because I think generally when you consider, even if you look at the concept of the current and non-current segregation, that 1 year parameter is very clearly given. Okay, Jayprakash, who says that debentures versus dividends. Dividends is not expenditure, it's income. So if you're receiving dividends or you're paying dividends, if you're paying dividends, it's not even an expense. It's not even an expense. It is considered to be a distribution of profits. It's not an expense. And debentures, whether you invest in any kind of security, whether it is equity, whether it is debt, it's always a financial asset, right? Okay, so I think we are now ready to take some more examples. Some of my friends want me to take some more examples before I conduct the test. Okay, let's do one thing. Let's give you a few items which you can randomly decide. Then I'll give you a formal test. I'll give you 10 items which you will not answer to me on the chat box. You will do your answers. I'll share the answers after that. But I think two, three questions outrightly. I'm going to give you an item. You have to decide, is it asset? And if it is asset, it'll be great if you can decide current, non-current, financial, non-financial. Cash. I'm looking at cash. Decide both the elements, current, non-current, financial, non-financial. You can write down C plus F, NC plus NF, whatever combination you want. That's right. It is current and it is financial in nature. Great. Debtors generally. Mind the question. Debtors generally. When I say generally, you understand that the credit period allowed is going to be generally a few months. That's right. It becomes current and financial. Investments for a period of 3 years. Investment for a period of 3 years. And that makes good sense. It's non-current, but it is financial in nature. Because you're making it for a period of 3 years makes it non-current, but the contractual right to receive is there, it becomes financial in nature. Machine. I look at a machine. I think many people are saying it's non-current and financial. It's not financial. A machine is going to create an opportunity, not a contractual right. It is non-current and it is non-financial in nature. That's great. I think I'll give you a couple of examples. Testing time. Now, I'm going to give you 10 items. You don't need to give me the answers in the chat box. Please do not give any answers. Even if you're done, do not give any answers because this is for the benefit of all. I am going to give you 10 questions. You have to decide it's an expense or is it an asset. And if you decide it's an asset, also decide it is current, non-current, financial, non-financial. 1 mark for each correct answer, no negative marking. So you have to give the answers. So don't give me the answers in the chat box, friends. Please do not give any answers on the chat box. I am going to share the screen, give you some 10 questions. Take your time. I'll give you around a couple of 3-4 minutes to do. Let's, I think, give you a small little test now. So let me share the questions to you. Please do not give any answers. I'm giving you a total of 10 items, 1 mark for each. When you say asset, please also decide further inputs as well. And also decide that it is current, non-current, and financial, non-financial. So that will be great. At least you should decide current, non-current. Even if you're not able to decide financial, non-financial, it's okay. You can still give 1 mark therein. Unless mentioned otherwise, I'm assuming the expenditure is done. I think somebody, Snail, your pen is marked blue. Can you please erase that as well? Otherwise, I'll have to change that figure. Thank you. So let me, I think, give you expenditure unless mentioned otherwise. It's incurred on 31st December. Building. Please do not give any answers on the chat box. Machine. Salary paid for work already done, salary paid for work already done, advance salary, advance salary, cash, debtors, 3 months credit. I give a 3 months credit. Investment, 3 years. Investment, 6 months. Furniture, loans given, 2 years. Please take your call. If it is an asset, please also decide current or non-current. If you can decide financial, non-financial, it's wonderful. If not, that's pretty okay. It'll hardly take you 2 to 3 minutes to answer these questions. Once I give you the answers, you can check the answers, and then scores can be given. So let me know in the chat box once you're done. I think I've already got message done. Okay, that's great. I think that's a pretty simple job. It would take you just almost 2 minutes at the max. Okay, so I think I'm ready to give the answers now. And you need to check your scores. And then I'll get your scores on the chat box after that. So the scores would be, if it is wrong, you get nothing, no negative marking. If you decide asset, current, non-current, you give yourself 1 mark. If you decided financial, non-financial incorrectly, that's fine. So current, non-current segregation is more important. If you have not been able to decide financial, non-financial, it's perfectly okay. Let's now give you the answers and let's begin. When I say building, building undoubtedly will be a non-current asset, and it gives you an opportunity to generate. So it's non-financial in nature. Same goes the logic for machine. It's going to give you a benefit for a long time, and it creates an opportunity. And trust me, the same goes for furniture as well. So I think if you've got the building correct, then machine and furniture would also be correct. Now, when I say the salary is paid for the work already done, the benefit is already obtained. And if the benefit is already obtained, it would create an expense in the income statement. Now, if there is an advance salary, I generally believe that the advance might have been given for a few months. So it is definitely a current asset, but you will not get the right to receive cash. Therefore, it becomes non-financial. You will get the contractual right, but not the right to receive the cash. So it's non-financial. Cash, I said, is always a current asset and is always a financial asset also. Debtors would be a current asset because it is 3 months and it gives you a contractual right to receive, so financial in nature. Investments, 3 years would be non current, but is always financial in nature. 6 months would be current asset, but is always financial in nature. And loans which are given for 2 years would be non-current in nature, and it is again the right to receive cash, so it becomes a financial asset in nature. So you can check your answers and give me your scores on a score of 10. Wow, we got majority getting a 10 or a 9. So far it's almost 9 or 10. Majority is getting a 10. That's wonderful. I'm one more interested in those people, who are from the non-accounting background. And I think somebody got a score of 5. I think everybody is getting 9. I think somebody got a score of 5. That was, I guess, Kartika. Why did you get 5? What went wrong, beta? What was the inputs? Where did you go wrong? I think so far whatever I've got scores is almost like 9, 9, 9, 10, 10, 10. Majority's got 9, 10. I think exceptionally one person got score of 5. So did you understand your mistakes now, where you went wrong?
Yes, sir. Actually, I'm very new to this accounting because I'm doing after like 10, 12 years. So I'm
Mhm.
taking, so I'm just recollecting all those things, but I'm not as fast as like other people. So I'm just trying.
That's perfectly okay. That's perfectly okay. But I hope you've been able to get the answers now clear, right?
Yeah. And I have a doubt with furniture because
Yeah.
I thought I did building and machinery as a non-current and non-financial, but
Mhm.
I thought furniture is an expense. Uh, I thought in that way, like
Okay.
how
So
would
you see,
uh,
if you buy a furniture, you will get the benefit for a couple of years, right? You can't get the benefit just for a year. Furniture is an item which will give you benefit definitely more than a year, correct? So it would be
okay,
non-current.
okay, okay, okay.
Yeah.
And a loan, I thought it's an expense. Like it's like I thought it's already obtained. So where did I go wrong
No,
in
no,
that understanding?
you've given. Let's say, for example, you give me a loan. So if you give me a
Okay,
loan, do I need to pay you this money back, right?
okay,
So that
yeah,
means you're yet to get the benefit. You're yet to get the money collected back. You'll get interest on the loan. You'll get the principal money back. So that would mean that the benefit is yet to be obtained because collections is yet to take place. So it becomes a
okay,
right to receive, and the right would be to receive cash.
okay, okay. Thank you, sir. Thank.
You're most welcome. Okay, I got another question. Monalisa, if for example, one, a building is rented, there is a contractual obligation to receive cash. So will it be a non-current financial asset rather than non-financial? You see, if you buy a building, now that's a very good question, which I like to clarify. If you buy a building, now there are two things. You bought a building, transaction one. You gave the building on a rent, transaction number two. So you cannot mix the two transactions. Buying a building is one, giving it on a rent or not is a second transaction because you may or may not give it on rent. So when you're going to give it on a rent, you get the right to receive the rent. The building is created an opportunity to receive a rent that doesn't convert the building into a financial asset. Even if you give the building on a rent, the building is created that opportunity that you can receive rent. Now entering into a rental arrangement is a second transaction. So in this particular case, if you say that there is rent which is yet to be collected, that becomes a financial asset. The building does not become a financial asset. The rent yet to be received becomes a financial asset. You got the answer right? Okay, that was great. I think majority of you did wonderfully well. I would say almost like 99% did wonderfully well. That's great. So I think we're all comfortable now in terms of the asset. We're ready to go to the second term. Okay, let's now go to the second term with you, and which is The second term is equity and liability. Okay, I got another question from Kanchan. In expense, will we further classify? No. Expense would just be an expense in the income statement, no classifications like current or non-current. The classification is only for an asset, not for an expense. Okay, great. So let's now proceed with the second stage of learning, and that is the second term which I want to consider, and that is understanding. Okay, I got another question, Praveen. So salary paid in advance can't be financial. You see, there are two elements in terms of calling it as financial: contractual right to receive, one. When you give the advance salary to the employee, you'll definitely get the contractual right. But the second is to receive cash. In this case, you'll get the right to receive services and not cash. Therefore, it cannot be financial in nature because it will fail the second element, that is the element to receive cash. You're going to get services, not cash. Right? I hope you got your answer on that. Okay, so I think with this input, now let's get on to the second element with you. Now, my second area of discussion is on the concept of what is called equity and what is called liability. So I'm taking two terms together apart from liability. I'm taking the concept of what is called equity and what is called liability. Now let's understand this in a little more detail. If you remember earlier, I gave you the concept of a separate legal entity. So let's say this is Mr. X and he starts a business. Now, remember, the business works upon two types of funds. Remember, every business works on two types of funds. One is called own funds and one is called loan funds. So let's say, for example, this is a bank. The owner, Mr. X, I'm saying Mr. X is supposed to be the owner. The owner puts some money into the business. When the owner puts money into the business, remember, the business owes this money back. Business takes the money from the owner, or business takes the money from the outsider, he owes the money back because there is a separate legal entity. So when the owner gives money to the business owes this money back. The business will say this is own funds. The business will say it is own funds, and the own funds is technically called equity. So the money which the business owes to the owner, mind the words, the money which the business owes to the owner is called equity. And when the money is taken from a banker, which can be called as an outsider, because he is not the owner, that can be called as an outsider, this money is called loan funds. This money is called loan funds, and the loan funds is what we technically called liability. So you can say business takes funds from two sources. One is from the owner. The money which he takes from the owner is returnable back to the owner, but it is called equity. And the money which the business gets from outsider is supposed to be loan funds, and that money is called liability. So the money is owed back to both the parties. But to make a distinction between what you owe to the owner and what you owe to the outsiders, a different terminology is used. So when the business takes the money from the owner, the money is called equity. And when the money is taken from the outsiders, whatever you owe to the outsiders, that is called liability. Let's understand one very important element at this stage. Yet the money which you owe to the owner is repayable only on liquidation. The business will repay this own funds or equity only on a liquidation. So there is no fixed tenure. There is no fixed tenure when this money is repaid. So this is going to be repayable. This is going to be repayable, you can say, on liquidation only. On liquidation only. So this money is going to be repayable on liquidation only. And when you look at the concept of the loan funds or liability, this was going to be repayable after a fixed tenure. This is definitely going to be paid after a fixed tenure. So when you consider equity, it is repayable only on liquidation of the company. So there is no tenure. The company may liquidate after 20 years, after 50 years, after 100 years. So equity is never segregated in terms of current, non-current. Equity is never segregated in terms of financial or non-financial in nature. But as far as liability is concerned, just the way you segregate the assets, even liabilities are segregated in terms of non-current, what is payable beyond a period of 1 year, and current, what is payable within a year or less than a year's time. And it is further segregated in terms of financial and non-financial in nature. So this means that when you consider the concept of liabilities, when you consider the concept of liabilities in this particular case, in this particular case, we can say it is segregated as current, non-current, financial, non-financial. Somebody said, sir, equity will always be non-current. No, we don't classify it as non-current. Yes, for understanding, you can call it as non-current, but in the balance sheet of the company, we will never classify that as non-current. Equity is just equity. Liquidation means, I think Jack Prakash, you said, when owner wants to wind up or sell the business to someone else. Correct. So when you are going to shut down the business, in other words, when you're going to shut down the business, at that stage, we can say the company is going to get liquidated. The company is going to shut down the business. That's the day when the owner, the equity money is paid. So I think let's put it like this. The business works on two kinds of funds. One is called own funds, that is called equity, and one is called loan funds, that is liability. Equity is repayable only on liquidation when the business will shut down. So no segregation in terms of current, non-current, financial, non-financial. But as far as liability is concerned, there is always a fixed tenure, a repayment, and it is segregated as current, non-current, financial, non-financial in nature. Now, when I say outsiders, I can say other than the owner, everybody is an outsider. Let me give you a list of outsiders as well. This is not an exhaustive list. This is only illustrative in nature. If you owe any money to the employees, they are outsiders. If you owe any money to your suppliers, they are outsiders. If you owe any money to the government, they are outsiders. If you owe any money to the banks or the financial institutions, they're all outsiders. So any money which is payable to anybody other than the owner is supposed to be a liability. You owe the money to the employee, salary yet to be paid to the employees. Money which is paid to the suppliers, the creditor. The money which is paid to the government in the form of taxes. The loans taken from the banks and financial institutions will have a fixed tenure, and they will always be considered as liabilities in nature. So let's do one thing. Let's, I think, now consider a few examples on liability. You can maybe help me with the same concept of asset. Is it current or non-current? Is it financial or non-financial? So we'll take some examples. You decide, is it current, non-current, and simultaneously also decide, is it financial or is it non-financial in nature? Let's take examples on this. Salary payable to the employee for 3 months. Salary which is payable to the employee for a period of 3 months, it is definitely current. And somebody is saying it's non-financial. I need to pay the money in cash. I've got a, let's now put it like this. When you say it is a financial liability, there will be two elements: contractual obligation and the contractual obligation to pay cash. When I pay advance salary, then I am going to get services in return. But if there is a salary which is yet payable, I need to pay cash. I need to pay cash. So it is financial in nature. Get this clear. Because as an employer, when I am yet to pay the salary is undoubtedly going to be paid in terms of cash. So it's going to be financial in nature. Now let's give you a little tricky question. Income tax payable to the government, current or non-current? First, we'll decide only current, non-current. Generally, the taxes will be payable over a few months. So it becomes definitely current in nature. Now decide carefully, decide carefully. Is it financial or non-financial in nature? Decide carefully, financial or non-financial. Many of you are saying it's financial. Do we have a contract with the government? Is my obligation to pay taxes contractual or is it legal in nature? It's legal in nature. I don't have any contract with the government to pay taxes. It's a legal obligation. And if it is a legal obligation, it cannot become financial. It becomes non financial in nature. Okay, let's give you another input as well. My company gave a warranty card. My company gave a warranty card to the customer that if there is anything wrong in the product, I'll repair it at my own cost. I'll repair it at my own cost. So, am I contractually obliged? Question one. I give a warranty card to the customer. If there is any problem, I will repair it, I'll replace it. So, there is a contractual obligation. But am I going to pay cash to the customer? Or am I going to provide him goods and services in return? So I'm going to provide him goods and services and not cash, and therefore it becomes financial or non financial in nature. It becomes non financial in nature. A little tricky, but I think you can easily decide. You need to see very carefully the two elements of financial, non financial. You've got contractual obligation, one. You've got obligation to pay cash or goods and services, two. If you've got obligation to pay cash, it becomes financial, but if it is goods and services, it becomes non financial in nature. Let's give you some more questions to decide. Or let's put some rapid fire questions to you at this stage, because I think I don't need to give you too much inputs on the concept of liability. So, why are we segregating the assets and liabilities at financial and non financial? That's a very interesting question which I am getting from Sayed. Let me now ask you something interesting. Which assets in the balance sheet will have more potential to generate? Financial or non financial? Which assets will have more potential to generate? Some people are saying it's financial. If there is a debtor and you give him an invoice of, let's say, 10 lakh, do you think he's going to pay you more than 10? He might land up paying you less than 10 on account of a bad debts, but you're never going to get more than 10. Trust me, the financial assets in the balance sheet will generate only what is stated in the balance sheet. They will not generate much more than that. The contractual right will ensure that you get only the fixed amount. Yes, certain financial assets can have the potential of generating more money. I understand. Certain. But majority of them no. But if you look at non-financial assets, they've got more potential to generate. If you've got a machine, can I say if you're going to use the machine, you're going to produce more goods and more services? You're going to earn more money, more production, more revenue, correct? So if I am presenting my financial statements in the balance sheet, can I say the stakeholders will get more information when he gets a segregation that this is financial and non-financial? He is able to get more detailed input. You get more power to take more decisions in life. The idea of making the financial statements of the company is to give all the relevant information to the stakeholders so that they can understand things better. I remember when I was in school, and even when I was in college, when we were given the definition of asset, we were given the definition of asset in a way that, you can just verbatim remember the definition without even understanding the essence. But as, we learned at the higher level of accounting, I realized that we can, learn things better if the basic fundamental gets clear. I think sure you would have realized that I am definitely going a little more than basics. Am I? If you say yes, it's encouraging. I think I'm definitely going a little more than the basics because since you are picking up a professional course, we need to definitely go a little beyond. Even at the advanced levels, I generally have a habit of teaching a little more than the requirement, because if you're able to learn a little more than the exam, sometimes you perform much better in the exams. I've created, step models in terms of years gaps and in terms of IFRS as well, which gives a lot of good gripping to the person in terms of the content. That gives you a better understanding. Because I feel conceptual clarity is the most important part. Practice will, of course, only cement the concept. But I think if you're conceptually lacking on the area, then it can be problematic. Great. Okay, completely new way. That's great. Okay, so let's now give you a few more examples before we go to the next terminology. So I'm now going to give you some items of liability. I'm not giving you items of equity. I'm just giving you items of liability. You need to decide current, non-current, and financial, non-financial. Loan taken for 5 years. A bank loan taken for a period of 5 years. That's right, it is non current and it is financial because you are under a contractual obligation to pay cash. So it is non current and it is financial. Great. Okay, so next item is a loan which is taken for a period of, let's say, 12 months, exactly 12 months. The loan is taken exactly for a period of 12 months. And that's right, it becomes current and it becomes financial in nature. So you would have realized that certain items can be current or non-current depending upon the intention. Wonderful. Okay, let's give you one more example and then we can go to the next terminology. Let's say there is an outstanding salary to the employee. I think I took that example, but I'm still taking it again. Outstanding salary to the employee. So it is definitely current. But why are you again saying financial? Okay, sorry, I missed it. It's not on the asset side. That's right, it's financial because I need to pay cash. My bad. Okay, so I think we're done. We're clear with the concept. That goes good. Any questions on asset, equity, liability? I think we've understood the balance sheet now because we've understood those terms. Can equity always on liquidation or can they obtain profits from the business? Well, in a company setup, the money which you take from the shareholders of the company is in the form of equity shares, and that money is never returnable until on liquidation. But yes, if the shareholders of the company wants to take the money back, they can always go on the stock exchange where the shares are listed, and they can definitely get the money back. So that is something which a shareholder can do at his own level. If he wants to get his money, he can sell the shares on the stock exchange and get the money back. But the company will be under no obligation to pay the money unless and until the liquidation happens. Right? Hope you got your answer, Kartika. Okay, Manali, sir, can warranty service be either current or non-current? Generally, no. When you sell your products, you will generally give the person, a reimbursement for within a short span because warranty period is generally for a period of few months, 6 months, 1 year. So generally, it would be current in nature. But depending on the facts, a portion may be current, a portion may be non-current. A portion may be current, a portion may be non-current. Okay. So I guess now I'm ready to take you to the how many terms have I covered so far? I think I've covered 3 terms with you, right? What about replacement? Replacement again doesn't mean that you're going to give cash now. If you're going to replace, let's say on a warranty, you're going to replace a laptop, you're not paying cash to the customer, you're replacing it. So how many terms we have done? I think we've done 3 terms, right? We've done 3 terms so far. I've done asset with expense. I've done expense already. I've done expense already. So I've done asset, I've done expense, I've done equity and liability. Now I'm coming to the last term, and that is income versus revenue. So that's my last accounting terminology that will take care of the terminologies with you. So I'm now coming to the concept of revenue versus income. When I look at the word revenue, there's another term which is comes to my mind that is income. So I'm going to look at both the terms revenue and income. So let's get some insights from your side now. So can you please show the notes of liability once? Okay, I just show that. Sorry. So, in the meantime, let me ask you, is revenue bigger or is income bigger? Because when you say revenue and income, what do you think which is a wider term? Is revenue a wider term or is income a wider term? Some people are saying revenue, a few people are saying income. It's a blended opinion. Revenues from sales, income can be different sources. I'm getting majority saying revenue, few people saying income, but majority seems to be saying that revenue is a larger term. Oh my God. Many times I've asked this question to people, and you always get these inputs that people say that revenue is larger than income. I'm afraid it's not. It's the other way around. It's the other way around. I think let's give you a simple equation to understand this better. If I were to explain the relationship between the two, I would say one can use the term total income. Total income, I can say, is equal to revenue plus other income. If I were to give you the interrelationship between the word revenue as well as income, I use the equation that total income is revenue plus other income. Now the question rises, what is revenue and what is other income? Many people give the correct answer as well, that revenue is which comes from operations of the business. Revenue is what comes from the business operations of the company. For example, when you sell goods, for example, when you render services. So when you say that you are going to sell goods, the money which you obtain from selling goods, that is revenue. The money which you get from rendering services, that is revenue. The money which you get from rendering services, that is supposed to be revenue in nature. So we can say revenue is when you sell goods, when you provide services, the money which you get from the sale of goods as supposed to be revenue in nature. When you say other income, it is from non-operations, something which is not your business, something which is not your core business. For example, my company is, let's say, selling garments. Then the money which I get from sale of garments is revenue. Well, let's say, for example, my company got some interest income, some dividend income, and that is supposed to be other income because that's from non-operation. And when you say it's other income, it could be, for example, even if you've got, let's say, an old machine which is used in the operations, and you sold that machine at a profit on sale. So even that profit on sale of that machine is something which is other income, something which is coming not due to business operations, but due to non-operations. And I think it's worth making a mention out here that when you consider a total income, from this total income, if you reduce the total expense, from the total income, when you reduce the total expenses, now these expenses are those expense, the benefit of which is already obtained. These are expenses which you have taken in the income statement. So these are expenses which you've taken in the income statement, the benefit of which is already obtained. You are going to get what is called a profit or what is called a loss. If your incomes are more than the expense, you get a profit. And if the incomes are less than the expense, you get a loss. So I hope we are very clear now that the word revenue is restricted in terms of what you get from the business operation, sale of goods and rendering of services. And what you get from non-operations, interest, dividends, profit and sale of old equipments, etc. That's all other income in nature. You add the revenue, you add the other income, you get total income. And do you think a company should be earning more revenue, or do you think the company should be earning more other income? If you want to assess the real financial performance of the company, what do you think is more important for the company to earn? That's right. They should be earning revenue instead of other income, because if I want to look at your financial performance, you need to be good at what you sell. And therefore, when we present the income statement, you see that other income is presented as a separate component on the face of the income statement. Face of the income statement means that when you look at the income statement on the very face, on the format itself, you see the segregation of other income as well. Right, friends? So I think that gives us, connects us all the dots together. So I think I have now done all my terminologies. I have given you all the four terms now. Now you should be clear with asset, expense, equity, liability, income, revenue. Accounting terminology gets over on that. So, our next area of discussion, which of course we'll take up in the next session with you, my next area of discussion is going to be considering the art of making journal. And we will learn the art of making a journal again using a three-step model. I'm going to give you a KV's three-step model on that, where we are going to learn two techniques, the traditional as well as the modern technique in terms of making the journal entry. So I think, friends, that's all for the day. If you got any questions at this stage, you can ask me. Otherwise, I think that's all for the day. The time passes by. We're almost done. 1.5 hours today. Thank you very much. It was indeed again a pleasure to interact with you. Have a good day. Thank you very much. And I'm going to see you in the next lesson. Okay, that's wonderful indeed. Thank you very much indeed. I think I missed a query, I guess. Somebody had a question. No, I think that got missed out. Okay, thank you very much indeed, friends. So I'm going to see you in the next class on Tuesday. Bye bye. Take care. Have a good day. How many sessions more to be conducted? One session is already done, and today is the second session. You can maybe catch up with the recording, and there will be, I think, another at least 3 more sessions to go before we complete the basics. So will we take a small break between our sessions? 1.5 hour, I think generally we manage without the break. As the session goes up, then of course we can get a small break in between as well. Okay, bye bye. Thank you.